Hi, welcome back. We are gradually moving to the practical section of the training. So please stay with me. In fact, stick with me. You see, we are going to explore more settings in this interface, in this futures trading. Now, one of the reasons why futures may be simple, yet very confusing when it comes to the trading is because of this lack of knowledge about the settings. Because many a time you realize that when upon trying to enter a trade, you realize that the system tells you, gives you some error. Why? Because whatever we are trying to achieve, the settings that we have does not meet. In fact, they do not meet. So you have to have the right settings in order to achieve a particular thing. So in this episode, we are going to look at some important aspects of this futures trading called the single asset mode versus multi-asset mode, and then we look at one-way mode versus hedge mode, and then we will also talk about other settings in this video. So please, I think in this training actually you have to take your pen. Why? Because I think doing this video was kind of impromptu, so I didn't really have things structured out, or where I'll have the chance to be editing the video, bringing the subtitle and the writings, and then giving you some interesting interactive videos that you can actually see. So once again, I remind you to use the YouTube feature to enable the subtitle, where you can get to understand whatever I'm saying or reading, so that we get better understanding. Else, I think if you are good and then you understand my diction, I think you'll be good to go. So here we are going to, if you navigate to this interface once again, and then under the features tab, right? So if you are here, if you move to the top left, just below the copy that you see there, there's this menu there, the three dots with the yellow icon on top, right? We are going to click that side. We are going to, there are a lot of settings there. I think it will take a number of videos to cover all of them. I wouldn't stay too much on them, but at least you listen to me. So when you move here, we have features, not futures, features. Some people contradict the meaning. In fact, the pronunciation. We have the actual training is what? Futures. And then this one is features. So we have features, we have data, we have learn, we have announcements. Now, when you move down, we see trade mode. These are the settings that you have to understand. By default, Binance gives you the classic mode. In fact, if you want the easier way, or more presentable, you can move to simple mode. Look at what is happening. You see, so it's the same thing, but just that this time around things are very simple. They are simplified here, right? So I still don't want this. I want to go back to my normal classic mode. Look at it. The animation is very beautiful. So we are back to the normal interface. Let's go once again, and then this time we are here. Now let's tackle the main tab called preferences, or the button under the features the features tab. We see preferences gradually move to the other side. So in this video we are tackling basically the preferences, your settings. Hit that. Now when you hit that, we have preferences, trading configuration, and then we have order confirmation. Let's hit that. When you hit this, these are the types of orders that you can actually use in entering a trade or the market, and this I will address them later. But just that this video requires that I'll touch on them, have a glimpse into some of them, but not to worry, we will do them gradually. So make sure everything is checked, just to make things simpler. So here I advise I check everything. Now let's move back. When you move back, we have something called position mode. Now position mode, click that. Before that, the default setting is one-way mode. Then we hit that. This is what we see. We see one-way mode. We have the hedge mode. Now let's briefly read this. I will explain them further. Now, one-way mode. In one-way mode, a symbol only supports holding a position in one direction. It means that if you are buying, you can only buy on one particular asset if I'm trading BTC, I can go long or short at one time. If I want to go in the opposite direction, I have to close this and then enter again. That's what it means. Then the hedge mode allows me to enter different types of direction or trades on one particular position or one particular pair. So if I'm trading a BTC in one long position, I can at the same time go in the other way and use short, and the system will allow me. That is what it means. Now for the record, see the question under there. The position mode cannot be adjusted with one positions or open orders in this type of the futures wallet. You understand that? Now position mode adjustments are effective for all symbols, right? These settings only applies to the USD at SM futures. Now one may want more understanding about this one-way mode and then the hedge mode. So now a minute. So what is one-way mode? One-way mode is related to how positions are managed. In one-way mode, you can only have one position per trading, right? Either long or short. Adding to this position will adjust the overall size and average entry, right? So now I think in the course of the training where we are doing the practicals, you realize that when you add one position to a particular position, they do not reflect as separate positions, but they are added upon, which Binance terms it as averaging. So you're adding more onto that. It doesn't give you separate positions, but you're adding to it, and then they add more to your position. Instead of in Forex, you see different types of different positions for one particular pair. So that is what it means. Now let's look at hedge mode. This allows you to hold both long and short positions on the same trading pair separately. For instance, you can be long on BTC/USDT, right, while also holding a short position in it. You understand? So that is what it means. Now let's move to the asset mode, right? The asset mode, the default is showing multi-assets mode. Let's hit that. Now when you hit this is what you see. Asset mode. We have single asset mode and the multi-asset mode. Now single asset mode. Now single asset mode, in single asset mode, right, this mode allows you to use only the collateral from one specific asset for margin in your futures positions. I'm going to take it again. Now for single asset mode, this mode allows you to use only one, right, use only the collateral from one specific asset for margin in your futures positions. Let me give you an example. For instance, if you are trading BTC/USDT, right, only USDT in your futures wallets can be used as collateral. You understand? So if you are using BTC/USDT, only USDT in your futures wallet can be used as collateral. We have already touched on what's a collateral. If you don't understand, check in this playlist and then watch what it means. Now let's look at multi-asset mode. In this mode, you can use multiple assets as collateral across different futures positions. What does this mean? So if you have both USDT and BUSD in your wallet, right, different assets in your wallet, you can use both for margin requirements, and Binance will automatically use your balance across assets to meet margin requirements. You understand? So different assets, and then different assets, the system has a way of making sure, maybe converting or swapping them into one particular asset, and then you use it as the margin. So that's what it means. So sometimes you see that in my wallet I have USDT and I have BTC. I can use the two as my collateral, which I've already addressed that to engage in that. So that is what it means. Probably one asset is on the limited side or is very small, It can be combined and then used as that is it. In fact, I think you'll be good to go. Practically, you understand what I mean. So I'm actually giving you this so that when you enter a trade and the system issues error, you understand what is happening, right? So I have some colleagues where you see, people don't really, in fact, the system looks simple, right? But upon trying to enter a position or a trade, that's when you realize that you don't really understand anything, and hence people are finding it difficult to trade futures, right? So I'm giving you this so that you understand why, as to why when you are doing something, the system issues that you understand. Because many a time when the system issues this error, you do understand, then what we can do is to what? Stop or leave the system. So that's what it means. Now we have to select contract unit. Now just leave it at what? USDT as that default, you understand. Now let's move to the next thing called what is it? Price protection, right? So, and please, this place, listen very attentively. They are very technical. I may have to attach on them once again, maybe later. So price protection and other adjustment features, right? We will talk about them touching on last price and then mark price. Let me hit on this. Now by default you see that they are checked. Just check them, right? Check them. Now this is the information there. You can pause the video and read before I start talking more about them, because reading just here can be very obscure, right? You won't understand what is happening there, right? So what is price protection, or what is its purpose? Now, price protection in Binance futures is a risk management feature that helps protect traders from unexpected price fluctuations due to market volatility. Now, here's how it works. 1. Purpose of price protection. It prevents orders from being triggered by sudden spikes or drops in price. When you enable price protection, your stop orders, like stop loss and take profit orders, are based on both the last price and mark price. You understand? They are based on that, the last price and mark price, rather than just one of them. This minimizes the chances of your stop orders being triggered by abnormal price movements that don't reflect the broader market. So by sudden movement that we are talking about in forex, we call it slippage, right? Spikes, they happen abnormally, then they trigger your positions or the entries or point that under normal circumstances wouldn't have happened. So this price protection protects you. Make sure things are what you actually set or you want them to be. I hope you understand. So now let's look at what is last price and the mark price so that you understand it better. Last price, this is the most recent transaction, the most recent transaction in the futures market. It reflects the current price that traders are transacting at on Binance futures, right? Now, mark price. This is an estimated fair value. An estimated fair value of the asset based on multiple factors, right? Including the spot index price and market conditions, right? Spot index price and then market conditions. The mark price helps prevent unnecessary liquidations due to market manipulation or sudden price movement or changes, as it's more stable than the last price. You understand? The mark price and the last price. So you can listen attentively, pause the video and then assimilate. Now, by enable price protection, your stop orders only execute if both the last price and mark price hit your trigger price, right? The last price and mark price hit your trigger price, helping avoid accidental or unnecessary execution due to sudden temporary price spikes or drops. That is it. So in practice, maybe we will see this. Or even when you're entering and it's not helping you, this is where you do your adjustment manipulations and that. massaging. That is it. Now let's move to what is order adjustment. Right, so order adjustments, adjustment confirmations will be required every time an order is submitted if this function is enabled. Now, so let's look at it. Listen carefully. Now, order adjustment. Now, order adjustment in Binance futures helps you manage orders that don't immediately get filled. Right? When you say get filled, get triggered or whatever, or need to be adjusted due to market conditions. Here's how it works. 1. Purpose of order adjustment. What is the purpose? This feature allows you to automatically adjust your orders based on market conditions. For example, if you place a limit order, what is a limit order? An order that only executes at a certain price or better. So I'm just explaining what is a limit order. We will look at them again. Now, order adjustments help increase the likelihood of it being filled if the market moves, right? So that is it, giving you certainty, correct settings, correct trigger. That is what it means. Now, how it works. Binance offers different settings for adjusting limit orders to improve their chances of getting filled. For instance, you might allow small changes in the order price, right? Small changes in the order price so that your trade goes through, even if the price fluctuates slightly. Sometimes it happens. For me, in my strategy, sometimes where my TP needs to be, according to my analysis, sometimes I reduce the TP on the chart. Maybe I wanted to hit at maybe price 1.00 whatever. Instead of allowing it there, sometimes I can reduce the TP level just to some level so that if price doesn't actually get there, sometimes a pip can actually change everything. So it's similar to that kind of thing. I hope you understand. And then now you can use these settings to mark your order more, to mark your wait. You can use these settings to make your order more dynamic in volatile markets, avoiding the need to manually change your order repeatedly. You understand? So sometimes you have to come do this, do that. But the system, so you understand that trading futures is very convenient, very simple. Even when it comes to the analysis, right? When it comes to the time screen, when it comes to the profitability, I think it's better. I've traded Forex for a long time now, and I am still exploring futures, and it's very profitable, very simple, very convenient. It's a whole lot of peace of mind. You understand? So that's when it comes to Forex, I have more experience than futures, but it doesn't mean I don't know, right? So we are still learning. You can be trading for years, but every now and then the market teaches you something different. So that is what it means. So now why last price and mark price matter in futures? Let's see why. Understanding last price and mark price is essential because each serve a specific role. 1. Last price. Last price is crucial for tracking real-time market activity and filling orders based on current trading activity. That's last price. Now, mark price is used for liquidation calculation. It's used for liquidation calculations to prevent sudden liquidations caused by price spikes as it smooths out abrupt movement. Right? Liquidation is where maybe you are taken out of the market. Right? So it has one side of it. Usually, that's what it means. Now, in summary, price protection uses both last price, right, and mark price to ensure stable stop orders and prevent unintended triggers. I'm taking it again. Last price, in summary, price protection. So we are now looking at the two, right? The main topics, the the two main subtopics. That's the order adjustment and then the price protection. So price protection uses both last price and mark price too, both like last price and mark price, to ensure stable stop orders and prevent unintended triggers. Now, order adjustment is a feature that makes your orders more adaptable to the market. So adjustment, so it's making them more adaptable to the market, allowing them to be adjusted automatically, right? Automatically within certain parameters if needed. You understand? So enabling these features can help you better manage your trades and protect against volatility, especially in fast moving markets like futures, right? So this video may sound more technical, but please, for the sake of you understanding everything, don't write through the video. You pause, still using the YouTube feature, and then please have some writing pad down and be writing, right? And then after that, you practice them. So in the next video, I think I will, don't worry. So we are still on the settings. So we move gradually to other one. When you move to the mock trading, you have better understanding of that. So I will see you in the next one. Bye for now.